EPS, E-mini futures, 2000 tick chart, and we're using price action rules and market geometry to determine where to enter for high probability setups. All right, guys, if we scroll over here to the overnight session, you can see we're in this sideways consolidation. Not a lot of opportunity here. No traders are really in the market. You can see the bars are massive, right? Like if we just measure this one bear bar right here, 32 ticks. So it's absolutely ginormous. But we do have this spike down, break outside of that spike down and out of this support area here. We break through it, create new low for this downtrend, but we continue to work lower. Originally I had something like this drawn. It's kind of like a spike and channel pattern. You can see spike, break new low, continue to work lower. So you draw a secondary channel, and that's what we look for when we see a spike and channel. But I'm going to delete this now, considering that downtrend that I just had drawn broke, created new low here, and continued to work lower. Now, as you can see with this spike down, you can see how strong it is. When you think that you might have overshoot of a channel, always look for how strong the push phase is in that channel to create that overshoot. You can see this is just a line, consecutive line of bear bars here. A lot of volume, a lot of strength in that. That caused overshoot, and I think it's overshoot because it caused a complete reversal of the market. Overshoot can often cause complete reversals. I mean, it can be like a huge downtrend too, like massive downtrend, multiple confirmations off the key entry points, and it'll have overshoot and it'll just completely reverse the market without ever creating new low. Because that's what we're looking for, right? We're looking to take trades to catch the swing to create new low, or the setups inside of this trend line, right? That's why I have those rules at the beginning of my video, right after my intro. First, you got to understand the bias of the market, right? You got to look for your key entry points, and then you got to look for the setups that go along with the bias that you already have established. The setup is the confirmation of the bias. So if you don't have the bias figured out, you shouldn't be looking for setups, right? And that's where, like when I say waiting for more price action or those kinds of things, it's because I'm waiting and I don't understand the bias completely yet. You know, you want to understand the bias really, really well to build that confidence to take that setup when it does happen. Then once that setup forms, you use the signal bar to determine whether or not the setup is worth taking, right? So you have your bias, you understand that. Now you sit there and you wait for the setup to happen at the key entry points, right? The 21 bar exponential moving average, the trend lines, the support and resistance, you know, those kinds of things. And then once that setup forms, your last entry criteria has to be checked, and that is a good signal bar. If the signal bar is bad, the setup's scratched, right? So if you get a good signal bar, you understand the bias, it's off a key entry point, and it's a good setup, that's what you're looking for. It's pretty simple. You just got to take time to understand how to count the entries, understand price action and what it wants to do. Like you can see that we have this uptrend here, break outside of this uptrend, create a new high. So we have a double trap. You can see new high, first entry long, because we broke above this bull bar, pull back, because we broke below this bear bar, right? So we have first entry long. After we create an entry or a first entry long, anytime price breaks below another bar after that first entry long, that is a pullback. Okay, so we have new high, first entry long, pullback, second entry long because it broke above this bar as well, pullback because it broke below this one, and a nice signal bar off of the EMA. And you can also see this setup looks like two visual legs pulling back to the EMA, almost measured tick, and there's a nice bull signal bar off the EMA. And it even offered you a higher low off of this multiple test area here. You can see we bounced here multiple times before this setup formed. You already have a double trap here, nice high probability setup, and then this higher low is confirming it because we didn't push too far away. You know, like if we pushed way up here and then came back down and created this bar, it's, you know, a lower probability trade because you really want that higher low to form directly after. You just want it to see like, okay, let's get some more orders filled for the original trade, right? If this trade is already worked out and scalped like 16 tick take profits for people, then the higher low has a lower chance of going anywhere, right? I tried to enter these two. Unfortunately, I did not get filled. It's tough because the past like week and a half, I've been really watching the slow there was a few days where it was like 1 ATR, stuff like that. So it was extremely slow. And then these formed extremely quickly. So my mindset wasn't in the right area. So just didn't get filled on them, unfortunately. So then we created a new high, and now it looks like we're working lower here. Eventually this downtrend will need to create new low, just like that uptrend needed to create new high. So let's see what the market wants to do here. All right, guys, so looking at this overall price action structure here, it's looking like we are in some kind of trading range. So I'm going to be looking for something. You can see we have multiple push phases up and down. So I'm going to be looking for some kind of wider trading range, something like this. Should make sense. We created new low after this spike down, pushed back above EMA, bounced multiple times off of this level here, and looks like we're pushing to the upside now. So I'm going to be applying trading range rules, buy low, sell high. But at the same time, I want to watch these short-term channels, get break, push to new extreme. Like if I'm looking to go long, I want to see the downtrend play out, right? I want to see like, let's say there was a second entry long here, okay? Let's say there's a second entry long here at the EMA. We have new high, first entry long, second entry long. What I want to see is this downtrend break and create new low at the same time that second entry long forms. That way I know all the bear pressure is played out, and then the second entry long is bouncing off these lows. That's when I look to enter the trade, right? That's why we draw these short-term channels. You want to know when that pressure is played out to the opposing side of the trade you're looking to take, okay? That's very, very important. Bias is the only thing that you need to be worried about, okay? The setups confirm it. It's very, very simple. Don't overcomplicate this. It's a very simple strategy. You're just looking for patterns, right? I was just talking to the subscribers in my Discord. And one of my favorite quotes, can't remember where I heard it. I think I heard part of it and then I made up the other part of it for myself. But trading has nothing to do with money. It's just a byproduct of having the skill. All we are is monkeys looking at information on a screen and clicking a button when we see a familiar pattern, right? The bias is what we use to determine when we're going to start looking for those patterns, okay? The money has nothing to do with trading. The more you can separate trading from money, the more you'll make. And that's just how trading is, right? A lot of people come into trading to make the money, right? That's normal. That's why we all start trading. But the problem is, if you're thinking about the money all the time, just picture all of those emotions that come along with that. You know what I'm saying? So it's important to separate these things. Money fundamentally has nothing to do with what we're doing right here. Like, there's no money here, right? It's just looking at information, printing on a chart, depending on what chart or time frame you're using, and you look for those patterns and you click a button when that pattern happens. The money comes from being good at it, okay? It's not like, if you're thinking about money, why would I be thinking about money right now? You know what I'm saying? I have to get the money from taking the trade, and then I have to go through the whole process to get it into my account, business account, and then you got to go through taxes and all these things, right? Like, that's a later problem. Right now, you're just sitting in front of information, clicking a button, okay? That's one of the most important skills you can have in trading. If you can lock that in, dude, you'll be so wealthy, it's insane, okay? Not only that, but if we were to think about money, right? Let's say I take one trade a month, okay? But it's only one contract. I'm not making a living doing that, okay? But the same thing that I did, let's say I want to make $200. I want to scalp, let's say I enter with 2 contracts and I want to make $200 per trade. So I scalp 8 ticks with those 2 contracts, right? So I make $200. I had a winning trade, okay? And I take that once a month. That's a $200 month. That's not that well, right? That's not that good. So look at this, okay? Let's say I take that same trade, but all I do is size up to 9 contracts. Now I make $900 on that one trade. So what I'm trying to get at here is the only difference between you making $200 a month and $900 a month is just the size of the trade. And the only way you can build the risk management, the I guess the calluses, right? Like to be able to handle risking that much money, the bigger the size, right? Is to do it. You have to just size up slowly but surely, right? Start with 1 contract, then go to 2, then go to 3, then go to 4. Not only that, you'll build over time, you'll build your accounts up to be stronger so you can risk more. You know, the rule of thumb is 2.5%, but there's been times, man, where I'll risk 50% of the account. And that's one thing too, right? Is sizing different depending on the probability of the trade. Like if I see a high probability, perfect second entry long, there's no bear pressure whatsoever, we're in a strong uptrend moving to the upside, and it's off of 2 key entry points, the exponential moving average and the trend line, like why wouldn't I size up there? You know, it's the trades that are like, oh, you know, there's a potential short-term downtrend here. The setup didn't form that clean, but the bias is strong enough for me to consider. I'm not going to size up on those ones. Dynamic sizing is another massive thing that you'll learn as you go into your trading and you have a little bit more experience doing this kind of stuff. Like some trades I enter with 6 contracts, some I enter with 9. I've actually entered some trades with 12 contracts. Also copy trading all of my prop firms behind my personal account and everything, right? Like I think my biggest day is like $24,000, and it wasn't even that big of a trade. It was just a crazy runner, and I was able to size into it. After I entered the trade, I saw it pull back and create a higher low right at the same level that I entered the original setup that higher low was confirming. So I doubled down, and I was copy trading that trade across like I think 20 Apex accounts, 5 Top Step accounts, and then I had my personal account. So, and it was one trade, man. Like $24,000 is people's yearly income, and I made that in one day just because I was able to execute and size up when I saw the trade in front of me. Dynamic sizing, right? That's something that you got to start learning how to do. It's a pretty difficult skill because there's sometimes, right, where you'll dynamic size, it'll be an insanely good setup. You'll take that setup with increased size and it'll still lose, right? That's just the game of trading. So it's important to, when you do dynamic size, you don't size too big to where you end up losing a crap ton of money just because, you know, every trade is independent of every other trade that you've taken, right? Let's say you have a 70% win rate and you take 100 trades, okay? With a 70% win rate, there's a chance that you have 70 winning trades in a row, but there's also a chance that that remaining 30% of losers all happen in a row, right? So you gotta be weary of that. You gotta keep in mind, like let's say if you have 2 losing trades in a row and you're about to take your third one, I'm gonna leave this up to you guys. I'm gonna leave it in the comments. I wanna know what you guys think. Do you size up or do you size down? If you have already had 2 losing trades in a row, do you size up or do you size down? Okay, so go ahead and leave that in the comments. And like I mentioned earlier, I have my Discord community. If you guys are interested, that's down there as well. But I'm going to continue to watch this. It looks like we're pushing to the top of this range. Sorry for the rant. Sometimes I get into this mood where I just really, it's motivating, man, because psychology is such a cool thing when you think about it, like especially in trading. So let's see what the market wants to do here. All right, guys, this downtrend just created new low. Unfortunately, no good setup to enter up here. We had the second entry short. Oh, actually, it's actually a third entry short. So yeah, no setup, unfortunately. I'm gonna go ahead and take my break here. Be gone for about an hour, and we'll see what the market's done. All right, guys, I just came back from my break. It looks like this downtrend broke below this bottom support level here. And we know that 90% of the time most breakouts fail, but you can see we broke out, came back and tested this. It's a breakout pullback pattern. You can see 2 legs, something like this. Looks pretty good. But this is what you like to see when you see a breakout that's going to continue to go lower or higher, depending on what side you break out. But you can see nice 2 legs, breakout, pullback, retest of this support as resistance, and then we ended up spiking down. Overall, pretty decent day. Looks like a trading range, but there was a lot more volume today, right? The ATR was a lot higher. FOMC was yesterday, so a lot more opportunities. Now we had, let me see if I can, so there's this one here, the double trap. The reason these are gone is because my NinjaTrader crashed, unfortunately, and it took away all my lines and stuff. But we have this double trap and then the higher low confirming it. Really the only 2 trades I see today that are worth risking. There was a few others, but I'm really only marking like the super high probability ones for now. Really good trades here though. I tried to get filled on both of them. Unfortunately, I did not get filled, so it's just a part of the game, you know. There's always tomorrow. Can't come into the market expecting to take trades, so I'm all right with missing these ones. But you can see overall pretty good price action, mainly just following these short-term channels most of the day. They work the same as wider ones: break, push to new low. This one up, break, push to new high. This one down, break, push to new low. That's what you're looking for. Clean price action overall today. But I'm going to go ahead and wrap it up here. So if you guys have any questions, feel free to leave them in the comments below. And if you are interested, join my Discord community. I live screen share my chart every day. So if that's something you're interested in, feel free to join up. It'll be in the description and the pinned comment. And feel free to subscribe. I'm going to be uploading my live charting sessions every day. Thank you guys for watching, and good luck with your trading.